It's the Tuesday edition of Business Morning. Good morning and welcome to the program. I'm Chimeze Obi Iwago. The second quarter GDP numbers released on Monday, no doubt, is an eye-opener to the extent the COVID-19 pandemic has affected the Nigerian economy. The second quarter GDP decline was largely attributed to significantly lower levels of both domestic and international economic activity during the quarter, which resulted from nationwide shutdown efforts aimed at containing the COVID-19 pandemic. Now, the domestic efforts ranged from initial restrictions of human and vehicular movement implemented in only few states to a nationwide curfew, bans on domestic and international travel, closure of schools and markets, and so on, affecting both local and international trade. All these culminated to the negative growth rate that we saw in the second quarter. The transportation and storage sector happens to record the highest decline, growing by minus 49.23% in that quarter year on year. And then quarter on quarter growth was minus 60.02%. Well, to speak more to this, I'm being joined by a trade logistics specialist and investment lawyer, Dr. Ikenna Nwosu. Good morning, Dr. Nwosu. Thank you for joining us on the program.
Thank you very much.
Our transportation sector is, one of the sectors with the highest contraction in second quarter. All the 6 activities in that sector, road transport, air, water, postal and courier services, and so on, all contracted. Did this come to you as a surprise, really?
Chimeze, it doesn't come to me as a surprise as an economic operator in the country. We are very, very satisfied with the level of the negative growth written out in the MBS report that was released yesterday, lending credence to the economic sustainability plan of the president, which has been implemented. Transport took a major hit. I mean, the total was about negative, about minus 41.63%. Across all the 6 sectors. I think the rail had the highest, minus 61, followed by air and then water. Now, partly because the water sector, you will say, had containers coming in during the lockdown. Now, but what you find out is that the transport sector worldwide, particularly air, was the hardest hit. Because you have over 7,000 aeroplanes grounded worldwide, and Nigeria is not an exception. And then with the closure of international borders, and mind you, Nigeria's own borders were closed, land borders were closed even before the COVID-19 setting, where we had issues in ECOWAS over trade smuggling and all that. So the cumulative effect, it didn't surprise us. You find that tourism was the next hardest hit sector because air travel also is the main enabler for tourism. So until after the 39 days of the interstate border closure, the lockdown, we still had a lot of restriction on movement. So when the NBS report came out and we studied it, it didn't come to us as a surprise. And incidentally, we actually expected more negative on the roadside than what we saw. Because up till date, by the time the quarter 3 report comes out, you're still going to have some negative growth because all the land transport, air transportation services are being operated at 50% capacity, if you note that. Now, beyond that, in the logistics sector, it is important to note that the negative growth we are having in the transportation sector is not only because of the COVID-19 situation. I have earlier mentioned that the border closures affected land transports in and out of Nigeria across all land borders, which is our neighboring countries. In addition to that, the logistics nightmare you have at the Apapa and Tinkan Island ports, and the logistics nightmare you also have at Ones Seaport, Obibo area, it's affecting land transportation for trade logistics. So it has all that cumulatively affects the flow of transportation. The services of the transport sector have been withdrawn severally because of the difficulties they have. So when all these statistics are added up by the MBS, we expected even more of a negative growth in the land road transport sector. Now, beyond trade logistics, human movements within the country, we are experiencing a situation where there may be, between local governments, between state governments, there may be interspersed lockdowns going forward. The transport sector's contribution to GDP in Q2 was 0.75%, which is not what we expected. We even expected it to be a bit lower. But in Q3, it's likely going to rise a bit. But going forward, there are still likely going to be pockets of restrictions in some other states and in local governments if there is a breakout. Like in Anambra State, about a month back, you had Oyi local government and Oka under some sort of lockdown. So we are still going to be seeing some negative growth going forward in regard to the transportation sector. I'd like to add this new information. 2 days ago, 48 hours ago, Maersk, a report was released by Maersk that downgraded Nigeria's office, their Nigerian office, to just an office. It's no more a hub. It used to be the hub. Nigeria used to be the hub for cargo movement in West Africa. If we've lost that to Cote d'Ivoire. We used to be the transit point for landlocked countries like Niger Republic and Chad for moving their cargo. That also is not happening. So you find that even the additional inflow of transport and outflow that will have gone to the landlocked countries, as well as the additional flow of transportation that will have happened if we are the hub for cargo in the region, those are also indices that join together in the calculation by MBS, I believe, for them to arrive at the negative growth we have in the transport sector. So it is very, very important for economic operators to note that it is not just the lockdown situation that led to this negative growth. There are other factors pre-COVID-19 that have led to that. And it behoves now the federal government, particularly the Office of the President, to take the bull by the horn. Because if we are recording this negative growth, the necessary steps that need to be taken to open up our borders for movement of goods in and out need to take place. And I will give you one compelling reason why. Nigeria has an international commitment for ACTFA. We were reluctant initially. We were the 53rd of the 54 countries that have signed it. Now, the commencement of operation of ACTFA, even though the 22nd country signed it, Eritrea, for it to take effect, its effective date was postponed because of COVID-19. Now, it envisages economic integration based on the free movement of goods, services, and funds. So if we have that international commitment, in addition to the ETLS commitment in the West African region, then it behoves us that we are going to be losing more on transportation, on goods free movement, if we do not hurry up to open our land borders so that we are able to have the free flow of goods and services. And when the global air borders open and we're able to get in air cargo coming, you find that because we have not fully developed the West African air route, a lot of the multinationals who move their cargo by road to West African countries have not been able to do that for most of this year. So we are losing, even on the manufacturing side, on the export side, as a result of the negative growth in transport. So apart from our domestic commitments, our international commitments, regionally and continentally, are affected by the negative growth in transport. So part of it is self-inflicted, and we need to make concise efforts in that regard. Thank you.
All right, Dr. Wonsu, yes, you did mention that those numbers didn't come to you as a surprise, and that in fact, you expected more than that, but thanks to the economic sustainability plans of the government. Just wondering, what exactly were the measures or sort of palliative that may have supported your sector that we're now seeing, well, even though that sector recorded the highest negative growth, but it was, for you, moderate compared to what you would have expected?
We expected not less than 50 to 55% negative growth as a minimum, because Nigeria did not even start her lockdown early. A number of countries started lockdown earlier than we did. And our lockdown, if I'm not wrong, was basically 39 days. So considering that the transportation sector, particularly land had restrictions before COVID, rail had restrictions because of banditry along the rail routes. The sea sector had constrictions because the congestion that occurred in the seaports during the COVID, even before COVID, we are still there, that led to longer dwell time of vessels waiting to offload cargo. And it has worsened now because the ports are largely congested with goods that came during the lockdown. And the water transportation sector for human movement within states and interstate was not, before COVID, was not experiencing any major increase. And you find that because of these factors pre-COVID, we expected that the negative growth should have been 50% and above. But perhaps there were other factors the National Bureau of Statistics took into consideration. For posts and courier, they didn't completely stop their services during COVID because the federal government allowed some sectors to be regarded as vital, including posts, and some categories of goods were coming also by air as trade goods. So those were allowed to come in. So posts and courier, even though they were impacted in a way to the extent that you are not getting normal 24 hours delivery, but the impact is still there now. Palliatives-wise, I haven't seen a package, I haven't heard of or read of any particular incentive package or palliative package from the federal government, whether from the Ministry or the Presidency, regarding the transport sector. Perhaps because the federal transport sector was, let's say the maritime side was still operating at the time, but not at full capacity. But if the air transport sector, subsector of transport, is getting palliatives as we heard, what of the other sectors? Why are they not getting? Beyond palliatives, Chimeze, beyond palliatives, the pre-COVID cause of congestion in the access roads to the seaports, all the seaports in this country, that problem is so embarrassing to Nigeria that it's like we are shooting ourselves in the foot as if we are sabotaging our own economy ourselves. How can the access roads to every seaport in this country is not optimal? Not one. Is it Apapa? Is it Tinkan? Is it One? Not one. So, beyond palliatives, let us do what is the right thing, and in that sector, you may not even need the palliatives. However, a number of truck owners, the associations, have called for palliatives to their own subsector in the transport industry because many of them operated below capacity during the COVID lockdown. And what we will be expecting to see will be the Ministry of Aviation and the Ministry of Transportation, where you have two ministers, come together, sit with the Economic Sustainability Committee and the Presidential Task Force on COVID, and come out with the policy framework for palliating that sector and all the subsectors under it. Posts and courier is under the Postmaster General of the Federation, and that's another thing under communication. So it's an interministerial committee that needs to come together to put in palliatives for the sector, because that sector is a key enabler for several other sectors in the country. And remember, our domestic, our regional, and our continental commitments are impacted by this negative growth.
Yeah, now talking about the Korea now, in the last a few weeks, NIPOST has attempted to regulate Korea subsector reforms. Is that a decision that could make or mar that sector?
You use the right phrase. It could make or it could mar. I am aware that the Association of Korea Companies have raised the hue and the cry. They've escalated the matter, and they've come together, had an engagement, stakeholder engagement, and they've communicated their views, their objections to the new regulatory releases by their regulator. You don't, I mean, you don't regulate without stakeholder engagement. It's always better, apart from having the global best practice regulation processes, it is always important to speak with the people you are regulating. Because a bottoms-up approach, a dialogue to a design approach, is the best practice in stakeholder engagement. But rather, the Korea regulator defined the problems by itself, defined the solutions by itself, and brought out the regulations, and then you are drumming it down the throat of the regulators. And so you get with the pushback you are getting, you expect it. So first, they're complaining of the high rates, that's one. And again, they are complaining that the Korea companies, particularly the DHS, the FedExes, the UPS, are complaining that they were not consulted. If they were, they would have made better inputs into it. So while we are busy grappling with current COVID impact and the negative growth, what we are having from the regulator of Post and Korea is further going to record negative growth in that industry. Mark my word.
Okay, now, Dr.
Because it will be disastrous if the operators in that sector decide to withdraw their services. You know what impact that will have.
All right, before I let you go, Dr. Nwosu, a quick one. What are the recovery prospects for the transportation sector?
Very bright, but it's going to be gradual. It's a quantitative easing process, particularly for air. Domestic is open, air travel, but 50% capacity for the flights. International, I heard August 29th, the task force says it may be longer. When it opens, there will also be restrictions. So it's going to be a quantitative easing process for air. On the sea side, a lot of Nigerian cargo is out there, outside the world, outside Nigeria, all over the world, wanting to come in. So we're going to have a deluge of cargo because we are in Q3. So I see also sea transportation rising. Now, rail transportation is also going to record a lot of increase because many people prefer it as an option against road because of the bad roads and the security situation in the country. In Lagos State, water transportation recorded almost triple the percentage because of the coronavirus situation and the traffic, the third mainland closure, the bad roads, the construction work. So in all sectors, I'm seeing an increase a likely increase in their volumes. In the third quarter, ensuring, I still say it's conditional, ensuring that while the quantitative easing is taking place, those pre-COVID situations that negatively impacted the various transport sector need to be taken care of. And if I may add, both FEMA and the Federal Ministry of Transportation need to work on the country's road networks, particularly interstate road network, in order to improve land transportation. Because a lot of people, look at the Kaduna-Abuja road, a lot of the people are preferring other modes of transport. And the opening of the Enugu airport as soon as possible, which was closed pre-COVID for runway repairs, needs to happen so that you see more traffic going in that direction.
All right.
And finally, I was happy to read that because of the congestion in Lagos, transportation issues, access road issues, cargo will be moved into Onitsha port via barges. Because currently we see a lot of cargo movement by barges, even from Apapa and Tenkan Port to Ikorodu Terminal, for people to take cargo. So all across, we're going to be seeing an upsurge in the sector's growth,
All right.
recovery-wise. But like I said, the pre-COVID issues that affected it, the sector, should be acted upon so that
All
we
right, thank
have
you.
a
Thank you
better
very
growth
much.
data quarter three.
Well, let's just
You're
hope
welcome.
we get it. Let's just hope we get it
Thank
right.
you.
Thank you very much, Dr. Ikenna Mosu, a trade logistics specialist and investment lawyer. Thank you for your time. We'll take a break now. When we come back, we'll look at the commodities market space. Just stay with us. And for updates on the domestic commodities market, I'm being joined by the head of research at financial derivatives company, Damilola Akimbami. Hello, Dami. Good to see you.
Chimeze.
Good morning. All right, let's kick off with your burning economic issues. We're seeing here the federal government raising alarm over low level of internally generated revenue by state governments and has declared Katsina, Kebbi, Borno, Bayelsa, and Taraba states as insolvent. What's the implications of this?
Yes, so these 5 states have been termed insolvent. So basically, they are poor, and that's because of they collected low levels of IGR. And what this means is that clearly these states don't have the funds to even provide the necessary stimulus to boost economic activity levels in these states. And what it means that obviously they won't be able to meet the outstanding obligations, and they will be in need of a bailout. So the government, the federal government, might need to step in to actually bail out these states.
Do you think they would want to do that at this time when I mean they are looking for money?
So that's a challenge, definitely, because the government too as a whole needs or is looking for funds to basically boost the economy. So it's something that definitely they're going to look into. And if you look at these 5 states, apart from Kebbi and Borno that have unemployment rates below 20%, the other 3 have high unemployment rates. So it could also be a reason as to why these states are actually reporting low IGR. And again, most of the states are in the north, apart from Bayelsa, and we know that the north has been saddled with a lot of insecurity, which has led to the displacement of farmers, the displacement of people outside those states. So these are some of the reasons that have contributed to this low IGR. The government definitely might need to step in to save, in quote, these states. And we know that even the federal allocation funds that were shared this month, they inched up marginally thanks to at least relatively stable oil prices and some improvement in VAT collection. But if there's a change in the market fundamentals and we start to see the monthly statutory allocations decline, obviously the government might not have sufficient buffers to help these states in need.
Now, is there any implications for food security?
Yes, for food security, again, like I mentioned, because of the insecurity that is happening in the north, most farmers have had to leave their farmlands, and because of the low economic activity level, and the north being the food hub of the country, definitely it will affect food supply, and that could lead to higher prices for food commodities.
Okay, now the CBN has announced a new price verification exercise for imports. Wondering why this is coming now. I thought we have pre-shipping inspection. What happens, to this?
So what the CBN is trying to do is basically to avoid over-invoicing. And what we've seen is of late is like a lot, because usually people that are importing goods from overseas, they go through third parties. They use buying agents. So are they going to
scrap the pre-shipping inspection?
Yes, so one of the circulars released also yesterday, in addition to the price verification scheme the CBN wants to start, is basically they've told importers that if you're going to raise a Form M, you are going to have to do it directly in favor of the end supplier. So you're not going to go through third parties. So the CBN is basically pushing out third parties, and also the price verification to avoid invoicing. So if it costs $1,000 to bring in a certain amount of goods, it's going to be $1,000. So that over-invoicing, basically to reduce the price. So if the price reduces, the CBN is of the opinion that the demand for Forex to reduce. So the CBN is just trying to implement as much measures as possible to complement its Forex rationing scheme.
But for you, do you think this is really the right step to really take at this time?
Oh, well, the CBN, like I mentioned, is trying so many measures, but the main thing is that the volume or the amount of forex in supply needs to be improved, because we've talked about the fact that we need stimulus packages to boost economic activity. Nigeria is highly import dependent, so these manufacturers need to have access to forex to be able to bring in the necessary raw materials to stimulate output and growth. So the CBN is just looking for all sorts of measures to do so. It might complement what is going on right now, but then you need to improve supply, and it might also lead to an adjustment in price. That has a short-term pain of higher food prices, which might lead to inflation. But as long as aggregate output increases, at the end of the day, it would suppress prices.
Okay. All right, let's look at the GDP numbers. What is the implication of these numbers for the commodities market space? We saw negative growth in trade, manufacturing, construction, you know, and we just talked about transportation now.
Yes, so, well, first of all, the numbers didn't come as a surprise. And again, Nigeria is not the only country recording negative growth. We have the US with minus 32% growth rate in Q2, Germany about 18%, even the UK about minus 20% growth rate. So it's not an unusual thing, although it's not a race to the bottom. Now, with that said, if you look at in terms of this sector's contribution to GDP, so you have agriculture, industries, and services. Those are the three broad categories. It's interesting to note that out of these three, only agriculture's share of contribution increased. So services, despite still being the largest contributor to GDP, its share reduced, industry still reduced. So that is actually a good thing. It's a positive fact in the sense that all the four indicators or sub-activities under the agriculture sector are still in positive territory. So you have the likes of fishing and livestock actually reporting a faster growth rate. Meanwhile, crop production and forestry recorded a slower pace of growth, but all four sub-activities are still in positive territory. So that's a good thing because, again, we just talked about food inflation. We're in the harvest season, but we're still seeing food prices still relatively sticky downwards. They're still high, and that's because the level of rainfall, at least towards this side of Nigeria, has been low. We're expected that by now we should see more rains occurring, which would impact positively on the harvest season. But we're not seeing that yet. So the harvest season might not be as robust as anticipated, and that definitely would impact on food prices. But with that said, the fact that agriculture was still one of the sectors that was able to weather the COVID impact storm to an extent, I think is a positive note. And as economic activity levels pick up, now that we know that the international flights are going to reopen August 29. We're seeing more activity levels pick up. We're seeing more restaurants, more sectors of the economy resume activity levels. I think that would impact positively on the growth numbers on commodities.
In other words, you say that the government intervention in that sector has paid off, like the anchor borrowers.
The government's intervention in that sector has paid off, and with that sector has been one of the major beneficiaries of all the reforms that both the government on the fiscal side and the central bank have been implementing. But even overall, if you look at the total stimulus package of the economic sustainability plan of 2.3 trillion naira, that is just about 20% of the total contraction in GDP. So yes, the government is doing the right things, but in terms of quantum, in terms of magnitude, we are barely scratched the surface. So the government needs to inject more funds into the system as soon as possible, coupled with the monetary policy. We just talked about the forex supply that needs to be beefed up. This will definitely impact positively on the level of economic activity in the country.
Now, the oil sector, of course, we've seen recorded a decline of 6.63%, contributing just 8.9% to the GDP. Of course, production is currently down. What is the implication of this for revenue?
Yes, so all sector, the contribution is minute, just about approximately 9%. But in terms of the impact on revenue, is significant because Nigeria receives over 80% of its forex receipts, of its revenue from oil. And the oil market has been volatile of recent, though oil prices are at least above $44. They're trading about $45 right now per barrel. Nigeria's oil production, however, has been declining. It's at 1.49 million barrels per day now as at July, according to OPEC's monthly oil market report. And now that OPEC is clamping down on the oil cheaters, in quote, ensuring that the compliance level is beefed up to 100%, Nigeria will be forced to reduce further its oil production to its quota of 1.4. And that is significant for us, like I mentioned, because of the implications on revenue or implications on Forex. We're talking about trying to beef up Forex supply, but if the major source is being constrained, it will definitely affect the ability of the government to intervene where necessary.
Now, with the tax revenue rising, is it something for us to cheer now?
Yes, so the government too is trying to diversify its revenue base. So that's why you're seeing more focus, increased focus of the government towards non-oil sector activities. And right now we've seen that tax revenue, thanks to the increase in the VAT rates from 5% to 7.5% in February, we're seeing that. But more importantly is the improved collection process, because you can increase your tax rate, but if there's still inefficiencies in the collection process, you're not going to achieve that much. So we're definitely seeing improved collection process, and that is what is resulting into the increase in tax revenue. So if we have more tax revenue, more VAT, more custom duties, more PPT, petroleum profit tax, that will complement or offset the loss that is being recorded in the oil sector.
All right, let's look through the domestic price movement and their major drivers. Can you take us through that?
Okay, so for the domestic commodity prices, like I mentioned, as in prices are still relatively mixed right now. So, and that's because, again, harvest season, one would expect increased rainfall to impact positively on that, but we're yet to see that. But we want to believe that at least once the rains resume, we should see food prices start to soften. But another factor that is affecting food prices is transportation costs. So we know that the pump price of petrol has increased. We know that there's a lot of construction going on. We know that the Third Mainland Bridge has been closed for at least 6 months. So this definitely are feeding into the logistics and distribution costs, and they're also impacting on prices. So despite the fact that we are expecting to see a pickup in the supply of food, but as long as these challenges, these supply disruptions still persist, they may offset whatever gains we would see in an improvement in food supply.
All right, thank you very much, Damilola, for your time.
Thank you, Chimizi.
Damilola Kimbami is the head of research at Financial Derivatives Company. We'll take a moment, we'll be back. And for review of Monday's equities trading and outlook, here is Temple Ashaju. Well, Temple, it was obvious yesterday that investors may have priced in the GDP contraction and so didn't react much to the dismal numbers.
Absolutely. That's the point. I mean, everyone's been looking at the numbers. Everyone anticipated what we saw yesterday, so it's not new, and that's why they already priced it in, factored it into their investment decision in the market ahead of yesterday's transactions, which was positive by 0.03%, giving us the 25,229.12 points. And if you look at the equity capitalization, it's now costing closer to 13.20 trillion naira. Now, that tells you that folks still have a few catalysts in the market, and that will be the dividend declaration by some companies that were not even expected to actually declare the dividend that have been given in the market. But look at the volume of transaction. It was really positive as well yesterday. We got a 38% movement here in terms of volume. Lately, we've been seeing some reactions from Transcorp PLC. Investors have been doing some kind of buying and sell down on Transcorp lately. Yesterday, we saw some 75 million units of its shares traded in the market, and it actually led losers. Chart yesterday it came ahead of 14 other companies in the market yesterday. We saw that the 75 million units of the shares was actually valued at around 82 or 46 million naira actually in the market yesterday. And then if you check at the end of the day what we have in terms of the value of transactions, we got some 35% growth here yesterday. It was a positive compared to what we did in the preceding trading session where we had just 1-point-something billion naira. That was on Friday. So today we got the value of transaction. Of course, GT Bank was positive yesterday. And of course, Zenith Bank, buying up, we saw on Zenith Bank and a couple of other, Unilever PLC precisely was responsible for 70% of the turnover that we had in the market yesterday. And of course, their deals was at 3,700 and something. Look at the banking stocks yesterday. We got a 0.01% decline yesterday. This was actually moderated by the gains that we saw on GT Bank yesterday. If not for that, it would have been worse, because if you price in what we saw on the likes of Jais Bank, which was down by 5%, Fidelity Bank, where we saw some profit percent and it reduced by some 1-point-something%. Then you have a couple of other banks that were also down. Then Nigerian Police Microfinance Bank was also down by more than 4% yesterday. All of that give us the red color that we have here, but would have been worse percentage-wise if not for the gains that we saw around GT Bank. Now, consumer goods side of the market was positive yesterday due to Champion Breweries, which was up by more than 8%. We also had International Breweries that was up by more than 4%. We had specifically Unilever. That was a major actor here. Now, since the 3rd of August that we last saw this company's price at 11 Naira plus in the market, it has risen by 35% and has moderated the year-to-date losses all the way from 40-something% now to just 24-point-something%. Tells you that the buy-in and increase of stake that Unilever overseas did on this particular company is giving us some gains, and we do hope that this will cost the price of Unilever all the way from 15 Naira where it closed yesterday back up to 40-something Naira that we used to have this particular FMCG some years back. Let's move on to the industrial goods side of the market. 1.7% decline was what we saw on WAPCO yesterday, and of course that represents some kind of a sell down, because some analysts have actually been recommending a reduction on the accumulation or a reduction on that particular company. The insurance space, Regency Alliance was down by more than 8%, and of course we saw Cornerstone by rising, of course, more than 8% yesterday. Regency Alliance was actually up by 9%. Oil and gas, there was specifically nothing to show for there. Adover PLC remained at 12 Naira 60 kobo. I know that Afri Investor has been recommending these as a buy because of the low valuation on the company. Cornwall was at 15 Naira, no movement. All here yesterday, nothing really to show. You get Seplat, one of the active stocks, Eternal PLC, one of the active stocks. O&O, nobody is looking that way right now. Perhaps they're waiting for the PIB and all that. So we're supposed to have Mr. Somson Amedu, a stockbroker with Alan Grange Securities, joining us on phone. Mr. Amedu, thank you for joining us on the program. Do you think that with the relative strength index of the market that is now around 14 days, we are in an overbought region and investors should be cautious?
Well, thank you very much. Yeah, like you said, the market has been appreciating for the past 14 days. And if you look at it carefully, the appreciation has basically been as a result of the Q2 results. The market has been reacting positively to the Q2 results, which is viewed by investors as better than expected. Now, we expect the market to still remain bullish, given the fact that the results that have trickled in or that have so far come in are good. If there is improved liquidity and also sustained demand, again, of course, if you look at the average P ratio of the market, it's about 14.5, which is quite good. And then, of course, the positive sentiment always associated with interim dividend expectations. We expect that if these 4-5 factors continue to play together, we should still see the market inching up in the days ahead. But considering the uncertainties, economic uncertainties, socio-political uncertainties, and especially the economic data that was released by NBS yesterday, in which the economy contracted by 6.1%, of course, investors will have to be a bit cautious. And that is true because other factors that are also increasing or rising are inflation, unemployment, rising debt. And as this continues, certainly is going to have some challenges. Government is going to have challenges even funding the budget. And if the situation persists a little longer, then it's going to have an effect on the overall market. So for now, I will suggest that investors should be a bit cautious, but considering other factors which I just enumerated, which is the Q2 results, an improved liquidity, sustained demand, and also the average P ratio, of course, we expect the market to see inch up.
All right, Mr. Samson Amedu, stockbroker with Alan Grange Securities. Thank you so much for those analyses. I appreciate them. Back to you now, Chimeze.
Thank you, Tempo. Well, I'm sure the market will continue to digest that data released yesterday. We'll take a break, and when we come back, we'll do an opening call to London. And then back here for the debt and currency market update. To stay with us. All right, let's do a crossover to London for update from Juliana. Good morning, Juliana. Well, financial markets around the world rallied strongly on Monday after the U.S. government approved a coronavirus treatment using the plasma of recovered patients, and hopes rose for the development of a vaccine. Is that positive optimism still sustained this morning in London as the markets open?
Good morning, Chimisa. Yep, the positive optimism at close of markets on Monday have crept into Tuesday. The FTSE 100 opened about 0.8% higher. The FTSE 250, the domestic market here in Britain, opened about 0.4% higher. A lot of the sentiment does appear to be coming from stateside, as you alluded to. Particularly overnight, there appeared to be a phone conversation between trade secretaries in Beijing and trade secretaries in Washington. According to reports, it was a very successful phone call, and perhaps there may be some more developments from the phase one of the new trade deal, which was struck in January. So that's very good. All eyes will be keenly focused on that. And yes, as you said yesterday, US authorities appeared to give the green light to a new coronavirus vaccine. And of course, until we find a vaccine, the world is still in trouble. So good news there. And that good news about the vaccine appeared to cheer the travel stock. British Airways owner IAG, they're up 5.5% this morning. EasyJet, the budget airline, up 5.2%. Aero Engineers, Rolls-Royce and Melrose, they're up 3.2% and 3.6% respectively.
Interesting. And Eurostar says it's now set to launch its direct Amsterdam to London service on the 26th of October. How eager are Londoners to have this service start?
I would say pretty eager, but then, of course, the entire travel industry has been completely wrecked due to the pandemic. So I'm not suspecting passenger numbers to be as they were supposed to be in April, which is when the direct line was first announced to be launched. That was put back 6 months due to the pandemic, and tickets will go on sale on September the 1st, which is next Tuesday. It will cost £40 per one way. That's the cheapest you can pay, and I'm sure any of our viewers that have tried to get a Eurostar ticket will be surprised if they do indeed get a ticket that is that cheap. But this is a good sign. Before, you had to travel to Amsterdam indirectly. So if you're travelling from St Pancras, which is King's Cross in London, you would have to go through Brussels and go through some security checks under a new agreement, or under an old agreement between Britain, Brussels, France and the Netherlands. But this has been scrapped now. And so if you are lucky to get a ticket at that price on September the 1st, as you said, it will start in October, and you can book until February 2021. So anybody thinking of getting an easy Christmas getaway can do so from next week.
And the owner of Topshop and Topman, Arcadia, has been accused of potential legal breach over redundancy terms. What is Arcadia's response to this accusation?
Well, Arcadia's response is that they will be following the government guidelines, but it appears as if they haven't. But this is all according to The Guardian, which is a left-wing newspaper here in Britain. According to them, they've spoken to disgruntled staff members who believe that they have been offered redundancy payouts based on the furlough scheme pay they were receiving, not on their actual pay. And I'm sure everybody knows the furlough scheme here in Britain was a subsidy scheme where the government were paying for people's wages up to 80% and up to £2,500. That was reduced early this month to 60%. And the Arcadia Group, they own Topshop, which is a really popular brand. Also, Evans, Wallace, Burton and Dorothy Perkins, they announced recently that they will be letting go 500 staff at their head office. And again, according to these reports, these staff are being offered redundancy payouts that amount to the 80% or the 60% they were receiving, not their full pay. And the government have tried to mitigate against any employer doing this. They put into law some legislation telling any company that if you do want to make your staff redundant whilst they're on furlough, then it's got to be based on their actual amount. But like I said, Arcadia said that they are working within the government guidelines. But this is not the first time Arcadia have got themselves in some hot trouble, especially under their boss, Sir Philip Green. So hopefully this will be turned around soon.
Well, the day is still young. The market has just opened. Let's continue to monitor the numbers. We'll get update from you later in the day.
Thank you, Chime.
And back here on the debt and currency market, Temple is back on board.
Yes, let's finish off here with the market again domestically. Of course, as the unlisted securities market was up again yesterday, it was up by some 28 basis points. We got the market capitalization back up to 522 billion naira, all the way from 520. We had 8,632 deals yesterday alone. And of course, WAMCO was responsible for 6,000 of the units that was traded yesterday, and that helped the company to move all the way from 121 naira 1 kobo to 120 naira 1 kobo actually to 121 naira 50 kobo eventually. Then we had 2,500 deals from CSCS and then a couple of other companies there that jumped and contributed via these deals to the numbers. 803,000 naira worth of transactions in the market. Debt and currency side of the market, here you got a little bit of a cold shoulder yesterday given the numbers, the GDP numbers that came in. That was not really impressive, coupled with the fact that from the last auction, the bond auction that happened last week, investors were not too happy with what panned out. We even got offers yesterday at about 10% at the longer end of the curve on these benchmark numbers, but investors were not too interested in that. Look at the NCB space, not so much of attraction on this side of markets yesterday, just 1.97 billion naira worth of transaction on this side of the markets yesterday, after we saw a total of 15 deals across board. And of course, at the open market side of the bills, we also got here, because again we had some liquidity, ample liquidity in the system, we got some interest around the short end of the curve, the December and November paper. We got that priced or discounted at 3 bids was 3.30%. Of course, at the end of the day, we got the offers coming in at 3%, but you know, generally on this side of the market, investors are basically waiting and watching to see what happens. We have Ramat Baba, who's the chief dealer with FBN Quest Merchant Bank, joining us on phone. Ramat, the reaction to the GDP numbers yesterday really impacted on the market. But in the coming days, we have so much of liquidity that we're expecting. We have bond coupon payments, and of course, we have maturities that will be coming into the market. How will all of that change the perception of dealers like you?
Good morning, Temple. So the perception, the general expectation in the market is that with over 1.2 trillion of automobiles maturing in the month of September, in fact, starting from this Thursday, which we have about 200 and something billion, we actually expect demand to ramp up in the market. Yes, like you said, activities have reduced on the T-bills end, and that's majorly because people believe yields have kind of bottomed out, unless, of course, they can get to buy at the OMO auctions and probably trade with it in the secondary market. So going into the next couple of weeks, we expect demand to come into the market, more demand in the market, both in the treasury bills and bond space as liquidity improves. So we expect yields to reverse again, because right now at the moment we can see yields trending north. So we expect market to reverse a bit given the liquidity, as of course investors have to put their funds into some kind of investment.
What do you anticipate for today and, of course, for the rest of the week? Let's say from Tuesday down to Friday, because we know that all of those maturities that you're expecting for the greater part of the coming weeks.
Yes. So for this week, we really don't expect current situation to change, just for the simple reason that there is going to be the CBN retail FX sales on Friday. So, of course, even though there is maturity of OMO bills on Thursday, market right now, of course, is also liquid, but there's not any major demand coming into the market, and that's because people are also trying to be cautious and banks are staying on the sideline because they're not sure of how much CRR will be hitting the system on Friday, as well as the fact that there will be debits for the FX sales on Friday as well.
Thank you so much for your insight, Ramat Baba, head of fixed income dealing with FBN Quest Merchant Bank. Thank you so much for your insight and analysis. It's back to you now, Chimeze.
Thank you, Temple. And on that note, we wrap up today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwagu.